Alright guys, we are back at it again with another trade breakdown, and I will be showing another example of the forever model, and it will be on a GBPJPY trade that I took, and this is an over 400 pip delivery, probably one of my biggest trades ever, and it will be, as always, utilizing a market maker buy model. So getting right into it, we have the Japanese yen futures chart, and I believe I did this on a previous video, and I showed you guys just the overall order flow, and I wanted you to mark off how it was annotated on the chart on the weekly. Now, obviously, you can see that price has been bearish, but mark off your annotations before I show mine. So the obvious draw on liquidity was price going from internal to external range move. So this being our draw on the weekly chart, if Japanese yen is bearish, that would mean that anything that is XXX JPY cross would be bullish. So if I'm holding a trade on anything that is XXX JPY cross, and I know that the higher time frame is bearish on the yen futures, I should definitely be leaving a piece of my position running to higher time frame external range targets while JPY futures are still running to a lower end target that has not been met yet. Some extra confluence that I actually had here was on euro pound, giving me the inclination and the depiction that the pound was going to be stronger than the euro, because on this monthly chart, we've been having a monthly internal to external range draw for so long. We have price drawing into this monthly internal range liquidity pool, tagging premium of the range, and then drawing down to this external range low. And the previous month retraced into this monthly bearish order block, retraced lower. And on the weekly chart, we even have weekly internal to external range move, which we actually reached this external range low, but we're actually just about to complete the monthly internal to external range move. So I had very strong conviction that the pound was going to be stronger than the euro. So if JPY futures are bearish and euro pound is also bearish, that means that GBPJPY will be the strongest pair that I should be focusing on for a long position. Now, this is the daily chart on Euro JPY and GBPJPY on the right. Now, mark off your annotations before I show mine on the next slide. So like I said before, you want to be focusing on longing the stronger asset compared to the weaker one. And you can just see already that GBPJPY reached its daily internal range move here to external range target all the way at the resting highs here. And what we're going to be focusing on is this area of price action, which is where we caught the internal to external range move, showing the forever model when price reaches a higher time frame key level, creates SMT in that higher time frame key level, and then you drop to your hourly chart to watch the reaction off of that internal range liquidity pool, which is looking for a change in state of delivery or a shift in market structure to go long to the daily external range highs. And like I said, given the fact that EG was bearish and we have a higher low on GBPJPY, a lower low on Euro JPY, my focus will be on GBPJPY longs off of this daily bullish fair value gap. So moving to our hourly chart, what do we do after price reaches that daily bullish fair value gap? We wait for a reaction or a change in state of delivery off of that gap. So I'm going to be waiting for that change in state of delivery. So I'm looking for the last up close candle that runs liquidity and creates the SMT. That will be labeled as our intermediate term low that we could focus on to then utilize that bullish order block as a reference point. And as you can see here, this is our confirmation of the change in state of delivery. Price on GBPJPY closed above the last down close candle that swept liquidity, created SMT, and then closed above that body high. So now that I see that we have that change in state of delivery, if I am awake during that time, which I wasn't, but if you were during London session, which is when the opportunity was offered, if price trades back into that bullish order block, that could be your first entry long to take out the external range liquidity. Now you can see the next candle that formed tagged the order block. that could have been your first entry point long with a stop loss at the body low that created the SMT and swept liquidity. And this in itself would have been a 1 to 2 risk to reward trade from the daily internal to external range target for your hourly market maker buy model. Now, like I said, I wasn't awake during that time, so I was going to look for New York to continue for price being higher to then see if I can capitalize on a entry for accumulation stage of the market maker buy model. So what did I do next? During New York session, I was watching for any more bullish PD arrays to form. And you can see here that we had on Euro JPY create an hourly bullish fair value gap and an hourly bullish fair value gap on GBPJPY. Now, what I did was this. I waited for price to have a run on buy stops inside of that hourly bullish fair value gap to create more SMT. And price swept a short-term low and created a lower low on GBPJPY and a higher low on Euro JPY inside of that hourly bullish fair value gap. But you might be asking me, why are you longing the weaker pair in this market maker buy model? I don't care about the SMT giving me the lower low on the intermediate term perspective. I care about it on the higher time frame because that will be subordinate to anything that is on the lower. And you'll see exactly why that has such more significance on the higher time frame compared to the intermediate, and you'll see the reaction as price continues. And fast forwarding in price, you can see even though that we created the higher low on EJ and the lower low on GJ, our energy and our higher time frame view with our daily SMT creating the higher low, we were able to reach the external range liquidity pool target before Euro JPY. So this would be my prioritized long setup. So price then pushed up, close above this up close candle being a mitigation block / breaker, and then price ran into the hourly bullish fair value gap inside of that mitigation block. This is our short-term low to the right of the intermediate term low, labeling accumulation. And you can see here, if you look at the hourly lows, we made a lower low on Euro JPY and the higher low on GBPJPY that finalized our daily internal to external range move on our hourly market maker buy model. And you can see here as price pushed after the external range, it was just a smooth staircase to heaven all the way to that 200 plus level on GBPJPY. And this is entries on both of my accounts and probably one of the longest swing trades that I've ever held with the most accumulated amount of pips, which was over 400. And actually one of my Discord members that got the alert was able to hold the trade from the entry that we caught from the hourly market maker buy model all the way to the daily external range highs that you can clearly see his entry and exit point here at over 200 plus on GBPJPY. Now, the biggest thing here for me is as I'm continuing to trade this model and as you guys are continuing to see this, you're going to be more comfortable holding trades to longer, higher time frame targets. And that will mean more money for you and more money in your pocket so that you're not leaving potential positions just off the table that can run for 50 to 100 to 200, 300, whatever amount of pips that you could potentially obtain. But as always, I hope you guys enjoyed this video. I hope it was as simplistic as I see it now. And hopefully over time, you'll be able to start seeing the same things that I see so that you can implement this strategy into your own personal one. But if you have any questions at all, drop it in the comments below. And like always, I'm looking forward to seeing you guys again next week in the next upload.